Welcome everybody to this MBL webinar. And the subject of this webinar is AIM listings, processes, compliance, and emerging trends. The AIM market, or the alternative investment market, is the London Stock Exchange's international market for much smaller and medium-sized growth companies. In order to grow, at some point, most businesses are going to need some form of equity investment. And listing on the alternative investment market, as opposed to the main market or the FTSE 100, is an option that is definitely worthy of consideration. The eligibility requirements for AIM are, by and large, less onerous than for the London Stock Exchange, and it gives companies from a very wide range of countries and sectors access to a diverse range of investors. So this webinar is going to cover off the following. We're going to have a look at the main reasons that companies might choose to go onto the AIM as opposed to the FTSE 100, the main markets. We'll look at at how businesses are admitted to AIM. We'll, where possible, compare and contrast the rules for listing with the main markets. We'll look at primary and secondary share issues. We'll have a chat about the different documents that you need to list, and we'll have a look at the AIM rules as compared to aspects of listing, prospectus, disclosure, and transparency. We'll also have a chat about nomads. We'll have a little chat about corporate governance regulation, and we'll have a chat about how businesses transition from AIM to the main market. So the alternative investment market came into being in June 1995 as a sub-market of the LSE, the London Stock Exchange. And it was designed to help much smaller businesses, particularly those that had high growth, that were keen on accessing a wider pool of investors to raise capital for expansion. It has much less onerous regulatory requirements. So, for example, there's no set requirement for market capitalization or the number of shares that have to be issued, things that might otherwise impede smaller businesses from getting themselves onto the main markets.